Hello and welcome everybody to day 24 of the trading marathon here on this channel. My name is Daniel, and in today's video I'm gonna explain to you the difference between an Elliottwave correction and an Elliottwave impulse. This is probably the most important knowledge that you need in order to decide or to differentiate in which wave or in which wave count based on the Elliottwave theory we are at the moment on the chart. And the concept is very simple. I'm gonna start. Well, let's not start at the chart. I've prepared some slides for you, which I'm going over with you in today's video, and also probably tomorrow and the day after tomorrow. It's pretty much a lot of theoretical information and key facts that you need to understand and also remember. In the best case, you write them down. In the best case, you already bought a journal or a physical notebook, which I told you already, like in the first or second video of this whole course that you will need, and you write all the stuff down that I'm telling you, because I'm not telling you for fun, you know. But let's start here by going over the general Elliottwave market cycle, or the basis thought that basically builds the foundation of the whole analysis I'm using to decide whether I'm taking a trade or not, right? So in theory, or the overall concept is that in a market, in a bullish market where we generally see an uptrend over the years, this way of how we are moving is always the same. In all assets and in all different kind of stuff that's getting traded, the price moves always in the same way based on the market psychology of all the buyers and sellers. And obviously over the past 50 or 100 years, people have detected those ways of moving and formulate them into clear verbal rules or lyrical rules that you can easily understand and apply in order to decide in which wave pattern we are, or at which phase of the overall market cycle we are at the moment, or at the time of you analyzing the asset. And in order to do that, you must understand how the overall market cycle is actually looking. And then later on in tomorrow's and the day after tomorrow's video, I'm gonna introduce you to all the detailed rules that you need to check in order to notice if your count that you have created or that you are following is correct or is technically following the rules. So overall, if we're looking at the daily time frame or whatever the market is, or the weekly time frame, like the bigger time frames, the market is generally, I mean, we are talking about bullish assets, and we need to establish the fact that the Elliottwave market cycle is obviously only going to work for assets which are in the long term rising towards the upside. If we are looking at an asset which is just going down all the time and never had any upwards movement which was significant and only went down, well, the Elliottwave market cycle is not applying to this asset since it's just a dying asset. Okay, then it can go down like this, it can go down like this, it can go down like this, it will go down, you know? That's with the dying assets. But if we are looking at an upwards rising asset which has, for example, an upwards movement, or more upwards than downwards over the past decades, then we are very likely looking at an asset which is following the market structure of an Elliottwave movement. And this is always determined by the way how it moves there, okay? And the way how it needs to go there is, well, it's basically displayed in the graph that I'm showing to you, but it's going up in an impulsive way and it's going down in a corrective way. And since these impulses to the upside are longer and stronger and moving in a way that moves up price-wise more than a correction could move to the downside, the overall trend is up, right? Because if you have an asset that moves down more than it moves up, yeah, well, then it's just dying over time, and then obviously it's not following the Elliottwave rules. But if you have an asset that always goes up more, that goes down, and then it goes down, and this is repeating over time, well, then very likely we are looking at some assets that's following the Elliottwave rules, and then you can apply all the knowledge that I'm teaching you here. You must understand that something can only go up in price if the upwards moves are stronger and developing in a stronger way than the downwards moves. And just by the thinking, or just in theory, if we are thinking about that concept, then obviously it's clear that the moves which are going to the upside, they need to be in some way stronger, or those must be some kind of waves or some kind of movements that generally take a longer price span to the upside than the moves to the downside. And as you can see, we can actually detect in which of those waves we are, because all the upwards moves, which should be stronger in an upwards trend, are consisting out of 5 waves, and all the downwards movements, which should be weaker, are consisting out of 3 waves. You can clearly see it in that graph. But don't be fooled, because only this in theory it would be too easy. Obviously, this principle is going, like starting from the weekly time frames, and then all the upwards moves are consisting out of 5 waves, and the downwards moves are consisting out of 3 waves. But if you zoom in the time frame, then obviously all the smaller upwards movements in the smaller time frames are also consisting out of 5 waves, and the downwards movements out of 3 waves. Or you cannot say that all the downwards movements are consisting out of 3 waves. It's more about impulses and correction, but if we have a long-term upwards movement, then most likely the upwards movements are impulsive and the downwards movements corrective. But you need to understand that even in the corrective downwards movements, there will be some kind of impulses to the downside, since a correction is just a smaller impulse, a smaller correction, and again a smaller impulse. So you really need to understand all the rules. No worry, today I told you no rules yet. I'm just telling you the overall principle so that you get what we are even trying to do here. In tomorrow's and the day after tomorrow's video, I will tell you all exact rules that you need to write down. Now it's just thinking and listening and remembering it later on when it comes to the point. But for now, it's just I'm preparing you for what we are actually doing here, okay, or what we are looking. We look at the way how the chart or how the price moves in some certain direction to understand if this could possibly be an impulse or a correction, okay? And the nice thing on this whole analysis method is that once you are in the right count and once you track the correct impulses in the correct directions and the corrections in the correct directions, you will come into some kind of flow state since you're following the right count. So all of your next upcoming predictions will be right. That doesn't mean that you should all the time take a trade. It just knows you always mean what's going to happen. It can also, in a correction you should not take a trade. But since you already know it's a correction, it will not be a problem. But you need to first of all understand when an impulse can be over, when it's done, when it's going to start, when a correction is starting, when a correction will be over, and so on. And that's what I'm going to teach you in the next videos. But understand that overall there is some kind of wave pattern which you can say is repeating over and over, and not only one wave pattern. There are actually several types of wave patterns or several kind of wave patterns, but there are 2 overall categories. And one category is the category of the impulses, that's all the strong moves, and one category is the category of the corrections, which are the weak moves. And they have different rules, and they have a certain, way of appearing. Some are appearing only in a certain or like all of them are only appearing in a certain wave. They cannot appear all, randomly. They have a certain order, you can say. But you first need to understand the rules of them in order to even, come up with the order they are in, But let's go over it step by step. First of all, if we're talking here in this video about the difference between an impulse and a correction, I want to show you a graph which I have created, which just shows simple examples of how a possible impulse or how a possible correction can look like. And you can see on the left side there is a perfect example of an impulse which could occur in wave 1, in wave 3, in wave 5, in wave A, and in wave C. You must remember that. In the best case, make a screenshot, write it down. And a normal impulse can only occur in wave 1, 3, 5, A, and C. It's kind of a fact that you must know. If I wake you up at 4 o'clock in the morning, you must know, the impulse, it only happens in wave 1, 3, 5, A, and C, It's information like that. On the other hand side, the correction only happens in wave 2, 4, and B. Also in wave W, X, Y, and Z. Well, I'm gonna explain it to you later on, but generally you need to know that the corrective waves, which are wave 2, 4, B, and all those W, X, Y, X, Z bullshit, those are the kind of corrections or the corrective moves that we are looking at. And the impulsive waves, which are going in the direction of the trend, which is wave 1, 3, 5, A, and C, those are following the rules of an impulse. So, and you also furthermore need to know that there are 3 different kind of impulses. Classic, well, I think I have another picture here. Yes, there are three kind of Elliottwave impulses. The classical impulse, the leading diagonal and the ending diagonal. Okay, in tomorrow's video we are going over the exact rules of those. So once you see some kind of wave pattern or chart behavior that's following exactly the rules that I will teach you, it can only be, like you will decide leading diagonal, ending diagonal or impulse, and then you have even furthermore knowledge in which wave we are, because for example the classic impulse, it can happen in wave 1, 3 and 5, but the leading diagonal only in wave, also in wave A and C, but the leading diagonal can only happen in wave 1 and A, and the ending diagonal can only happen in wave 5 and C. So you see where I'm getting it, right? So once you understand where those patterns are and what rules they are following, even furthermore in which overall count we are, which gives you a huge advantage in comparison to the normal pattern trader, which are just using resistance and support, because they have no idea where we are overall. They just see a W and they think they should go long. So we are doing something very, very different here. Also there are, let's complete the factual information of this video. There are also 4 types of corrections. The ABC, the WXY, ABC is also called zigzag, the WXY is also called flat pattern, the WXYXZ, which is called 3+3, this is a very mean one, since it's like an ABC, an ABC, an ABC, an ABC, an ABC, which is the most annoying shit you can get in Elliottwave, but I'm also gonna teach you how to come up with those. And, actually, the triangle is the most annoying shit. It's also 5 ABCs or WXYs following each other in a corrective and slow way to play out, but where we are going to go in detail in that the day after tomorrow, guys. I hope you appreciate the information that I'm sharing here with you. That's just kind of an overview, and I really hope you write all this down, and I really hope you make some screenshots and everything, because it's this information will be your bread, that you really need to learn by heart. And even also the information that's following tomorrow and the day after tomorrow. But that's it for now, I think. Let me check. Yes, that was it for now. I hope you understand that there are some stronger waves and some weaker waves. The stronger waves are called impulses, and they're going in the direction of the trend. The weaker waves are called corrections, and they're going against the trend. And there are overall 7 types of those thingies, or 7 types of those impulses and corrections, which I will teach you to determine in which we are in tomorrow and the day after tomorrow's video, guys. I hope you like this information. Leave a like and a comment down below. Don't forget to subscribe to the channel, and we see each other in... wait. I didn't show you, I think, my yesterday's half marathon and my today's half marathon. This is also here. Papa. Yes. Okay. Well then, see you in tomorrow's video, guys. Bye bye.